Good morning. Look at that day outside. It's absolutely beautiful. And here I am with my Dunkin' Donuts coffee once again. I've only had one cup though, so I'm due to have a second one after this video. So I am Kenny Polcari, your host of the party. And today is Wednesday, April 20th, 2022. And what is it that you need to do? What is it that you need to know, right? Stocks rallied yesterday, and what I really think is much more of a dead cat bounce really versus kind of a sustained move higher. Bond yields are kissing 3%, and then they just backed off just a tiny bit, but they're going to get ready to kiss it again. Netflix was a disaster, falling 25% post the earnings, post the close last night, as 35 street analysts have a buy rating on the stock. Oh boy, wait till you see what happens today. And oil gaining after yesterday's decline. It's just more of the same, right? They talk about shutdowns and closures and then openings and summer, so oil is going higher. And what are we having for dinner tonight? We're going to have the shells with sweet sausage and peas. Such a comfort dish and so easy to make. Stocks rallied yesterday in what feels like I said a dead cat bounce after being in a bit of an oversold position. All while bonds continue also to come under pressure, sending yields on 10-year treasuries to an intraday high of 2.977% before ending the day yielding 2.93. At 4 p.m., the Dow added 500 points. The S&P up 70. The Nasdaq rallied back 290 points. The Russell gained 40, and the transports added 410 points, or 2.8%. It was another big earnings day. Beats from Johnson & Johnson and CFG and Halliburton and Lockheed Martin and Prologis were met with slight misses from the likes of Fifth Third Bank and Hasbro. But the real story was after the bell. Netflix getting absolutely pummeled after they reported a beat on the bottom line, right? They reported a beat on the bottom line of 353 versus 290. Very good, right? You'd think it was great, but they missed on so many other metrics. So while the beat looked good, it was the underlying story that set the place ablaze. Password sharing, the war in Ukraine, declining revenues, dropping subscribers, the first net loss of subscribers in 10 years in a very competitive environment, all being credited to the sad story. The stock, which closed up 3% on the day at $3.48 a share, fell 25% in the moments after the headlines hit the taper, $87 a share to close at $2.56. What's even more comical is that 35 Wall Street analysts have a buy rating on the stock, even as lost 45% of its value since mid-November, when it ticked at $700 a share. And this morning, after yesterday's beating, the stock is now down 60% from that high. So watch what all these analysts do this morning. It's going to be comical as they all rush to issue, neutral ratings or, God forbid, sell ratings after the fact. A sell rating now should really be the reason to buy it, whatever. Competitors in the space include Disney, Roku, Amazon, Warner Media, Para, and Comcast. All stocks have been under pressure since the fall. The gains yesterday in the market, though, were broad. Every sector was in the green except energy, which fell 0.8%. Hardly anything to worry about, as that ETF is ringing the cash register, up 45% year to date. And as you'd expect, I pointed out in prior notes, the winners yesterday were the well-oversold sectors. That's where the trader types look to make a quick buck. So consumer discretionary up 3%. That was down 12% coming into yesterday. Communications up 2%. That was down 15%. Real estate up 2%. That was down 7% coming into the day. Tech up 2%. That was down 16% coming into the day. Home builders surging by 4%. That group was down 30% year to date. Retail is up 3.7%. Semiconductors up 2%. And ARC, the tech disruptor, rallied by 4%. Coming in down 40% into the day yesterday. So do you see the pattern here? The value traders up 1.3%, putting it in the positive column for the year. And that includes big divvy payers like Berkshire, Johnson, Procter, ExxonMobil, Chevron, UNH, Coke, Verizon. Very much the theme for 2022. While the growth trade, SPYG, did rise 2%, but is down 13% on the year. This morning, the business programs were all talking about how both stocks and bonds are down in the year, which doesn't make sense to a lot of them. Some asking, well, then where is the money going? Well, let's be clear. The money isn't necessarily going anywhere. It's being reallocated. It's not going away. It's moving out of those weak sectors noted above and being put to work in sectors that are expected to benefit in the months ahead as we move into a more inflationary environment, forcing the Fed to raise interest rates. So sectors like energy up 45%. Financials are down 3%, but that's really a win. Utilities are up 6%. Consumer staples are up 3%. But individual names up even more. Johnson's up 8%. Coke up 11%. Walmart up 11%. Kellogg's up 8%. Healthcare's flat on the year. Metals and miners up 45%. Coal and fertilizer stocks, names like BTU up 200%. CRK up 115%. Mosaic up 100%. CF Industries up 56%. And the list goes on. So don't let anyone tell you that money's coming out of the market. It is not. It's being reallocated. And remember, the tone is nervous. So buyers are not pressured to buy in names that are weak and expected to remain weak for now, but that will turn at some point. In this case, patience is a virtue, and dollar cost averaging is a good way to play for the long term if you like the underlying story and the stock and sector is just out of favor temporarily, right? Now's the time where you can build a bigger position if you believe in the story. But if the underlying story is weak, then get the hell out of there. This morning, U.S. futures are churning, right? The Dow's up 35 points, the S&P's up 3, Nasdaq's down 15, and the Russell is up 8. Treasury prices are up this morning, sending yields a bit lower, and that's helping to calm the psyche. But don't get lulled into anything. It's a temporary reprieve. Bonds will continue to decline as the Fed makes it clear what their next move is. And while the market expects a 50 basis point move in 2 weeks, Jimmy B came out on Monday and made it clear that 75 or even 100 basis points is at least on the table. Now, I don't think that that's going to happen unless, of course, we start to hear much more about it in the 8 days in front of us. Pay attention to the talking heads out of the Fed, as well as the big financial institutions like Goldman, JP Morgan, Morgan Stanley, BlackRock, Citibank. And remember, we go into the quiet period with Fed heads just in another week. So if they're going to do it, they're going to have to start talking quick. Earnings today include Anthem, NASDAQ, Procter & Gamble, Abbott, and after the bell, the one to watch is going to be Tesla. Other names after the bell include United Airlines, Coca-Cola Enterprises, CSX, Alcoa, and EFX. Eco data today includes mortgage apps and existing home sales, which are expected to be down 4.1%. At 2 p.m., we're also going to get the Fed's Beige Book, which details the State of the Union across the 12 Federal Reserve regions. Boston, New York, Philly, Cleveland, Richmond, Atlanta, Chicago, St. Louis, Minneapolis, Kansas City, Dallas, and San Francisco. Oil is up 75 cents this morning at $103 a barrel, holding above the $100 trend line after yesterday's beatdown. Concerns over Libya and the ongoing Russian issue were the causes of yesterday's weakness. Today, no one's even using those arguments to drive the action. Summer is coming, China is hinting at reopening, and demand is strong. Do not expect that oil is going to decline going into late spring, early summer. Not happening. European markets are all higher this morning. Yesterday, the International Monetary Fund, or the IMF, cut global growth projections for both 2022 and 2023, putting the blame squarely on Vlad and the Russian invasion, saying that it will add to price pressures and significant policy challenges. This follows the move on Monday by the World Bank that also cut global growth forecasts for the same reasons. In any event, it's about earnings, ECB policy, and the war in Eastern Europe that's going to continue to drive the action. Notice no one said anything about COVID. At 7 a.m., markets across the region are all up about 1%, right, on average. So a little below, a little bit higher. The S&P closed the day yesterday up 70 points at 4462, leaving it between the two trend lines, right? 44.15 on the downside, 44.96 on the upside. I'd expect the markets to continue to thrash around as the 10-year Treasury kisses 3%. One of two things is going to happen when we kiss it and pierce it. Either the administration and their talking heads are going to tell us how great 3% is for the economy and what that means, and there's nothing to worry about, hoping to calm markets and send them higher, or a kiss at 3% is going to ignite a firestorm of selling as the reality of higher interest rates takes a further toll on the economic recovery. Either way, there is an opportunity for those that are paying attention. So just watch for the opportunity in any event. You have to kind of figure out where you stand, right? This morning, Bitcoin's trading at 41,000, up slightly, and Ethereum is trading at 3,100. Again, just up slightly, kind of churning where it's been. So what do we have for dinner tonight? So this is such a great dish. It's pasta shells, medium shells, with sweet sausage and peas with a touch of cream and plenty of fresh Parmigiana cheese for sure, right? It is comfort food, right? Makes you feel good in your belly. So for this, you need 1 pound of medium shells. You need sweet Italian sausage out of the casing, a bag of frozen peas, 1 large Spanish onion, garlic, salt, and pepper chicken broth. You can use white wine. You need a touch of cream and plenty of fresh grated Parmigiana cheese. So start by bringing that pot of salted water to a rolling boil on the back burner and just leave it there so it's ready when you need it. Now in a large pot, one that will accommodate the pasta, you're going to add a little bit of olive oil and brown the sausage meat. Get it all nice and brown, and then take it. Once it's done, take it out. Just put it in a dish and just leave it aside. In that same pot, you're going to add the chopped garlic and the sliced onion. Saute it until it's soft, about 8 to 10 minutes. Then add back in the sausage. Put it in with the onions and the garlic. Toss it around. Take the bag of frozen peas, toss that in there, season it with salt and pepper, turn the heat to medium-low, cover and let it cook for 15 minutes, kind of stirring it every once in a while. Now, after about 15 minutes, you're going to add some chicken broth or the white wine, just enough to bathe the meat. Do not cover it. If you're using the white wine, bring it to a boil and let the alcohol burn off. If you're using chicken broth, bring it to a boil and then just turn the heat down to medium-low, right? Uncovered and kind of let it just all come together. Now, add the pasta shells to the water, cook it for 8 minutes or so. You want it to be al dente, you know that. Strain the pasta, keeping the pasta water in case you need it. Add the shells right to the sausage and peas. Mix it. Now add in a touch of heavy cream or half and half, whatever you got, just to give it a little bit more body, and then toss in a handful of grated Parmigiana cheese and stir it all up, get it all mixed nice, right? If it needs it, if it sucks up all the juice, just add in a little bit more of the pasta water to keep it moist. Serve it immediately in warm bowls, always having more cheese on the table for your guests. And I love this with toasted garlic bread. Yum. And guess what? The cost to make this dish to feed a family of 4 should not be any more than $30, maybe $35, depending on where you live, depending on what kind of sausage meat you choose or what kind of wine you pick. Should be about $30 or $35 to feed a family of 4, and if you're lucky, there'll be leftovers because tomorrow it's even better. One way or the other, the day is just starting. It looks like it's going to be another exciting day today. Markets are just kind of churning, but until tomorrow, take good care.